NZD.
That's crazy because like the scanner has always worked for me. Maybe a few, I guess, but swipe trades is been a no-go for me.
Look, it's still going up. Oh my God.
That's insane.
It is still going up. I cannot believe it. Like, honestly, if I just do
And
that.
you did get in on that?
No, well, I tried to, but my stop loss was too small, so it didn't cover the broker fee.
Right.
So mad. I was like, this could have been amazing. I mean, it's still an amazing thing because, I mean, I called this and I just
Yeah.
had the right stop loss.
Gotcha.
But this call alone made yesterday, last night, or not last night, but like late yesterday morning, like 1 a.m. or earlier. So this call is over 450 pips.
Wow. And you called it to be a buy.
I called it to be a buy.
Wow.
So I'm gonna have to do another live. That is insane. So this is what I saw.
Okay.
Let me reset this chart. So this call was actually on the 1 hour.
Mm-hmm.
So let me go ahead and show you what the 1 hour looked like. So on the 1 hour, it called that pattern. And that pattern is supposed to be a sell.
Right.
So what I did, using all the stuff that they teach, I'm gonna do it right here. Because at the time that I saw this, it was about here. Okay. And so at this time, first thing I did was I followed a Daisy Duncan and I drew my support and resistance lines. At the time of this call, which I think was about here, possibly somewhere in there, it must have been earlier because this was a 15-minute call and that's the hour. So it must have been probably about this red or this green right here.
Mm-hmm.
So I made my first resistance and my first support based off of where I was at. So this was the closest support and resistance. I then drew the parallel trend line, which is a tool found in this section.
Mm-hmm.
Maybe not. Maybe it's this one. Yeah. So wherever you normally draw your lines, there's one called parallel channel. And I learned this from Manny Quinones.
Okay.
Are you writing these names down?
Yes.
Cool. I can't see you. I minimized the video, so
Okay.
I'm not trying to sound pretentious. I'm trying to make sure you know who I'm calling. Manny Quinones. So that's MAN-NY Quinones. Q-U-I-N with the little thing above it.
Okay.
O-N-E-S. So he's found in the English harmonic scanner section.
Okay. And you said Q-U-I-N-O?
N-E-S.
N-E-S. Okay.
Quinones.
Okay.
So the parallel channel is what I drew next. And I did it from the bottom of the trend.
Okay.
Drew it up so that it hit as many wicks as possible, even though it went through candles. Because those candles they're not quite pass and checks, also known as PACs, P-A-Cs. That's who I learned. I learned that from Steve Greger. They're not quite pass and checks, which means they would break through and then, check the line again. These were actually just, I guess they could be considered fake outs.
Mm-hmm.
But I'm not 100% sure if that's the right terminology. So even though it went through, I tried to do as many wicks as possible. So this wick, this wick, this wick, this wick, and kept it going. And I stretched it out a little bit further, so I kind of made the chart, bigger and smaller so I could. And then what happens is when you click here and then click here, and I'll just show you parallel. So wherever you click, it draws the line first, and then it draws the channel up and down perpendicularly. So that allows you to actually create that channel.
Okay.
So once I made that first line, I then brought it up to the highest wick, and that showed me the current pattern.
Bring up. Okay.
So most of what I'm teaching you is what I learned from Manny Quinones's class.
Okay.
I'll show you how to access that. I'm about to start Lee Allen's. Hers is like a 6-week course. It's almost as many hours as Steve Greger's Pitchforks course.
Mm-hmm.
So I don't know what's in there just yet. I can't speak on it. I'm literally, most of what I'm sharing with you for this particular trade, I learned from Manny.
Okay.
So I made that pattern, or the parallel channel, and then I started using Elliott wave. It didn't look like it would be the correct Elliott wave, and I actually misspoke on my trending. I said it was a weak trend, but it's actually a strong trend, and I'll show you why here in a second.
Okay.
So do you know what a Heikin Ashi candle is?
No.
Oh, I learned this one from Manny. So a Heikin Ashi candle, Heikin, I'll put it in the chat for you.
Okay.
I am still recording. Yes, I am recording. Perfect. Chat. Oops. So Heikin Ashi. So Investopedia is probably going to be your best friend.
All
This
right.
is a very valid website to go to look and improve your trading knowledge. In fact, another thing that you might want to consider doing, and I haven't purchased it yet, just because I just haven't bought it. What did I look for last? Flashcard forex. So I've been looking for flashcards for forex, but I found something better. And it's hilarious because, actually, I know I sent it to my mom, so let me go get that. It's hilarious because, one, it's a card deck. It's a 52 card deck that you can actually play with. And on the cards is information about different things. So let's see. There we go. All right. So here's the link for it. It's only, it says it's $8.95, but with the shipping, it's $100 to be like $16 or so. So on this card deck, it actually has like what a downtrend looks like, what a bear market is, a lot of the things that you learn in the videos. But what's cool about this, hearts are market trends and market analysis. Clubs are theory, options, foreign exchange, and futures. So it's not just forex, because literally all the charts are basically the same. Diamonds are future contracts, the market, stocks, and types of investors. Spades are types of market orders, risk, technical analysis, and the importance of investing with a plan, rules. So I thought that was pretty cool.
Yeah.
All right, so Heikin Ashi, it says a better candlestick. Basically, the close, everything is a slightly different. So the close is the average of your OHLC. Your open is the average of the previous bar open and the close of the previous bar. So it's just slightly different in how things are done. And when you turn it on, it shows you your uptrends and your downtrends. So when I was doing my Elliott wave, one thing I learned today through Lee Allen is that when you use these, you can't, these two candles do not mean that it's a downtrend. 3, it might be a downtrend. I still used it because it just seemed appropriate to do so. Because again, it was a down, up, you know, there was clear that there was an uptrend and downtrend with that. So the Elliott wave, I went from the 0 to the first wave, second wave, third wave, fourth wave, fifth wave. And then I believed that this was going to be a correction wave, which is going to be your ABC. Now, Manny Quinones does use Fibonacci, not quite like what Steve Greger does. I would highly suggest checking out, what date was that one? Steve Greger's, hold on, I'm still growing.
Okay.
9/27.
Okay.
So his training from 9/27 is literally all about Fibonacci.
Okay.
You will learn so much Fibonacci, your head is going to spin, but take lots of notes.
Okay.
So Steve uses Fibonacci way different than any other trader, and there's a reason for it. The way that he trades is extremely precise, which is
Okay.
why I like him. He's very much a numbers guy, very much a data guy. Don't let that scare you if you're not a data person. Just take it in stride and just kind of just learn, just keep learning.
Okay.
Manny, on the other hand, has a very simple training, and all he does is he tells you when you get your Fibonacci retracement, which is found with your pitchforks. So when you get your Fibonacci, you always start top to bottom. And he kind of moves them around so that you can see them, but for now I'm just going to keep it where it is. So this is actually in reverse because the numbers are going up as they go down. So we need to turn that to normal. Okay, so we can see that the first wave is that 100%, so 382.5618, because when we went from this to this, that was an uptrend. When we're looking to see what the retracement might be, when we see that it's going into a downtrend, we then turn it to a reverse Fibonacci. So reverse here, and then we move it so that you can see the numbers, which is what that other one is there, right there. And make sure that that is where this is. So the way you can do that is by hovering over the candle and looking at the OHLC at the top and looking at the low. So the low is 1.96421. To make sure it's on there, when you've touched the Fibonacci retracement and go back to your settings, in coordinates, you can actually say where you want it to go. So price 1 was where we hit at the top, and price 2 is where we came down at the bottom. So we want to make this price 2 where this candle's low was. So 1.96421.
Okay.
So it didn't move it much, but when you're using Fibonacci, you want to be as accurate as possible because you might not hit what you're trying to hit. So we can see that the retracement here didn't even go to 0.382. Now, if this was a real Elliott wave, that would indicate that it's a very strong trend, which it really is because it's still going up. But at the time, I said it was a weak trend. This is incorrect. Let me get the notes here so I can make sure I'm telling you correct information. I believe what I'm about to tell you was on the Steve Greger training that I was just telling you about.
Okay.
It might have been Manny. Okay, yeah. So it was Manny's training, and it was on day 9/20.
Okay.
So 9/20, and that's part of his course. So I would highly suggest starting back at the beginning because he doesn't have a whole bunch like everybody else does. I guess his got messed up or something. So start back at the beginning.
All right.
But on 9/20 was when he taught about the Fibonacci pullbacks, which is what you're seeing right here. If it were in a downtrend, you'd want it to go the opposite direction. So basically, if you are projecting, you are wanting the Fibonacci numbers to go in the direction that you're thinking it's going to go. So if you are expecting it to go down, you want the Fibo to be reversed if you started at the top like Manny suggests. If you are expecting it to go high, you want it to be normal Fibonacci because you're expecting the numbers to go up. That's if you're projecting. If you're doing retracements, obviously it's going to be opposite because we are still looking for here to here, but we're looking for at least a 0.382 retracement.
Okay.
Does that make sense?
Yes.
Okay, I know it's a lot, so I want to make sure.
Yeah.
So what Manny said on September 20th is that a Fibonacci pullback is a shallow trend when it's less than 0.236. So let's go ahead and add that 0.236 just to see.
Okay.
So it says a 0.236, so that means it's shallow, and that means it's a strong trend, which it is. I mean, it's still going up. So I misspoke when I did my live, which I'm gonna, you know, share this. Actually, I'll probably just share this video cut up on my profile. If it had gone to between 236 and 382, this would be the expected pullback. Most people expect it to be at least to 382, and this would be a normal trend. 382 to 5 is a normal pullback, and it would be a moderate trend.
Okay.
0.5 to 0.6 would be a deep pullback, and it would be a weak trend.
Okay.
So this was an indication that it was a strong uptrend, which is directly in conflict with the harmonic scan that one of our tools sent out. However, I'm not upset because it still said, hey, this was a potential trade, and it was. How many pips did I say?
400 and something.
400? Yeah, crazy.
That is crazy.
So, all right. So I just did that all the way up the line. You know, I looked to see where each of these levels were, and looked at those Fibonacci's and said, okay, this still looks like it's going to be good. And I just kept going up and up and up. Well, when I got to about here, it wasn't quite here yet. So let me zoom in. I was looking at this part of the chart. So this is at the top of that uptrend that I was looking at. This candle had not formed. This candle was, I think, forming. And so to me, this looked like an descending triangle. And a descending triangle, which I learned from Manny, it's also in the academy. A descending triangle indicates that the trend is going to go down. So this particular tool confirmed the harmonic scan because it looks like it's going down.
Right.
So what I did, I don't know why it just did that. So what I did from here is really? What is going on here? Why won't you let me do this? I'm gonna save this and refresh because it's acting kind of weird. Mind you, this is all on the hour chart. I haven't even looked at the 30-minute or 15 yet in what I did. Well, you can see it, so we'll just keep going.
Yeah.
So from here, I was seeing this descending triangle because, first of all, the regular candles. It is just not liking me, apparently, this evening. It's not liking these secrets I'm giving to you, girl.
Right.
All right. So from the regular candles, I could see that it was in a downtrend. Again, this candle was not there yet.
Okay.
So I drew another parallel channel. And because the top of this channel and the bottom of that channel were where it was crossing, that looked to me like a descending triangle. Again, this part was not there yet.
Okay.
So two things can happen. One, it's either going to break through and go up, or it's going to go down and keep going down and confirm the harmonic scan trade. So at this point, it's still not quite clear to me what's going to happen.
Okay.
So I keep waiting, and I look at the 30-minute chart. Now the 30-minute chart was when I could start using this background as you see here. So this background is the MTFA HMA with bands. This is something that Steve Greger is training on right now, and it's like amazing. So the band I'm going to leave on 60 minutes and leave the line at local. Now, what does that mean? Because I was now on the 30-minute, I could utilize this tool. And it had not yet gotten here yet. So what does this tell me? The green line is the local price action. So locally, the 30-minute was in a buy. The background color is a green. The background I have at 60-minute, which means the hour is a buy. So the 60 minutes a buy, the 30 minutes a buy. You've got a really strong trend going on, you know. So the buy signals were outliving the sell signals, even though our tool said sell. Everything that I've been learning says buy. So I'm like, okay, this is getting pretty exciting. What else can I do with this? So at this point, this candle's forming.
Right.
And here we're seeing that it's having a hard time. It's wanting to go up. It's having a hard time at that trend. So it's indicating it's wanting to really, really break through, or it's going to really, really shoot down.
Right.
Okay. So at this point, I then move to the 15-minute. I don't know what is up with charts today, man.
What did you call that background again?
MTFA HMA with bands. You will see that in Steve Greger's training on September 29th. All right, so now we're on the 15-minute. We have to change our band to be on the 30-minute because you really don't want to go too high above where you're at, because that could be an inaccurate reading. So when I'm on the 15-minute, where are we? Oops. Oh, daggone. So on the 15-minute, we see that the local 15-minute is currently, I think it was about here when I saw this, possibly here. So again, yeah, it must have been there because it hadn't quite. So it's showing that it's a sell in the current 15-minute, but it's a buy in the 30, it's a buy in the 60, it's a strong signal. Again, all of these things piling up and up and up on each other.
Right.
So what I did then, I think I waited a little bit longer. I did. I waited until I got to about here. It was already past the trend. So on the 30-minute chart for this, because I think that's how I made the call. No, there was still a couple of steps before that. I'm sorry. But here's what I did. So before it came out here, what else do you see from here? I might have to go back to the 15 to show you this, actually. So let me do that. Go back here. Change this. No, that's fine. Yes, I did. Okay. What do you see in this picture? Does anything pop out at you?
Well, the only thing that I see is maybe like the railroad, like the double wick. I'm not sure.
So I don't see a railroad. I see something. This one looks like a tweezer to me, but I don't see a railroad because these aren't the same wick size.
Okay, gotcha.
But what I see here, do you know what a bullish flag is?
No.
Okay. So this is also in the academy. I believe it's either the technicals or maybe advanced.
Okay. I haven't done the advanced yet.
So a bullish flag, and see, I decided to go through as much as I could of the academy as possible. I got eventually the harmonics, and I was like, oh my gosh, just give me something I can use.
Right.
Eventually, I've realized that everything that I learned, I can use. So what's happening with the bullish flag is there's a bullish flag and a bearish flag. Obviously, they're just opposites. So a
Okay.
bullish flag, you'll see in strong uptrends. Confirmation. They're bull flags because it looks like a flagpole.
Okay.
So we see that there's a bit of consolidation here and this long, what they call pole here. Do you see that on this chart?
Yes.
So that is actually what cinched it for me, is I saw the bullish flag and all that good stuff. And what happens then is you take whatever that flagpole is, so it from the very bottom to the very top, where that trend started, and you put it, I think, where it breaks out here. So I did that. Oh no, it must have been lower. Where? Maybe it was on a different chart. But wherever it was at, I expected it to hit at least here. The problem was it stopped me out before, like, you see where that wick ends right here?
Yes.
So it didn't get me stopped out because the candle went out. It got me stopped out because my broker, it went from like whatever the time was, and the time flipped to the next day. So the broker added a commission and added something else. And so when it hit here, they went, oh, we have to cut you out, because if it goes any lower, you know, it'll go past your stop loss. So unfortunately, I got stopped out because my stop loss wasn't big enough. It was big enough for the wick, so I was right about that, but I didn't take into consideration what the broker was going to pull as well.
Right.
And so I was so sad, because then I started seeing it go up and up and up. And just as we said before,
Gosh, it went way up.
yep. And we'll just say there, 440 pips was that one call I made one time.
Yeah, good job.
Thank you. So I don't know if I would have got all those pips, because I mean, this is likely something that I would have had alerts going on and stuff like that.
Right.
But I mean, the fact is that one failed call from our tool plus the education allowed me to make this call.
Right.
So yeah.
Well, I hope whoever did get in on that.
Probably nobody. Because like I said, I wasn't like making a call. I was just, hey, this is what I'm seeing here, and this is you know what I'm doing, blah blah. And in fact, if I remember correctly, it even cut out when I was halfway going through it. So they never would have seen the bullish flag and everything else.
Right.
So where can you get this information that I've been spewing and, you know, gushing over? So in your back office, obviously there are all the Academy videos. In what I've been looking at, come on, I am there we go. So in the live training education, under English, you've got okay. So the ones that I've been using almost exclusively so far, and I've been doing this since June. But again, I'm sure you've noticed I have a lot going on, so I'm not doing it as fast as some of the other people in our team, which is fine. We all have different priorities.
Right.
But under Forex Basics Education, you have Lee Allen doing charting and analysis for beginners at 12 p.m. on Tuesday.
Okay.
under harmonic scanner education, you have Manny Quinones, Mondays through Thursdays at 12 p.m. Eastern or 11 a.m. Central. He is the one that that almost everything I showed you on that chart, I learned from him in his course. Now, again, most of it, if not all of it, is in the academy, but what he does is he gets on and he goes through trades with you and he goes, all right, I think this one's a good one. Let's go ahead and chart it. And he charts through it with you and he walks through different things. Like on his particular training set, one time was about Elliott wave, one time was about Fibonacci, one time was about something else. And so you just come here during those days. And then Steve Greger is the other one in the harmonic scanner. He teaches what's called Charlie Delta trading.
Charlie Delta.
And so basically what that is, and before I go through this, past results are not typical. They do not guarantee nor dictate your future success. I'm simply providing you educational purposes for you. Your financial investments do include some risk. Please be sure to speak with a financial advisor before taking my advice. All right, so what I've been doing is, what's interesting about this is that it doesn't always actually show you everything. So what I've done is I've clicked the reset button to make sure that I'm very at the end of a particular trade. I've also started ignoring the trends that are going up. And the reason for that isn't necessarily that they're bad, it's just I heard Manny say that there is an understanding that it goes much faster down than it goes up, which for my particular trade I just shared with you, that's not the case. But in general, it goes a lot faster down than it goes up. So I look more for trades that are expected to go down, which is why I found the trade yesterday, which again is pretty funny.
I think I do that too. I'm more biased against towards sales. Yeah.
So one other thing that Manny has, was it Manny or was it Steve? I think it was Steve. Steve said that whenever you find a harmonic pattern in a higher time frame, you're likely to find them in the lower time frames. So I start on the top. So I believe a crab is up. I'm still learning those. A bat should be down. Nope, totally wrong again. Shark is a sell, isn't it? I think it is. Yeah, because people keep talking about, oh, I hate sharks. This one's perfect. Look at this. So it's past the second entry, so it's definitely on the end. Actually, let me make sure about this. 179,109. Yeah, that's fine. So it's definitely in. It's definitely starting to go down. So this is a trade that I would probably take, especially because it's currently showing overbought. So do you know how to transfer this to your TradingView?
No.
Okay. I learned this from, I believe it was Steve Greger. Anyway, it makes sense. I don't know why not everybody teaches this. No, I think it was Manny. It might have been Manny. Anyway, regardless, I double click on the price chart to make it full view. I then get this as close and as big as possible so that I can really see what's going on. Raise those candles a little bit. And then what I do is I add in the vertical line. I'm going to make this pretty thick so you can see it. I'm going to stay in the drawing mode, put it on magnet, X, oops, A, B, C, and D. Get out of the drawing mode so I can actually put these in the appropriate locations. I think those were correct. I don't think the D was. Nope. All right. So from here, I then take a screenshot. Oh, not that small of a screenshot. Maybe it is that small of a screenshot. And then I save it in a particular folder where I do all of my stuff.
Mm-hmm.
Business, trading days, 2018-10-05. And this is on the Euro NZD. Ooh, okay. So this is something that is probably going to be very exciting to you, Euro NZD. Do you know about the, it's an app on your phone. The first 7 days are free. Otherwise, it's $10 one time.
Okay.
Currency heatwave.
No.
Okay. Where do trying to see me. How do I see me? That's no fun. Okay, well, hopefully, can you see this if I do this?
Yes.
Okay, so this is the currency heat wave. Can you see the whole screen?
Mm-hmm.
Okay. So this is the average heat wave for all time frames. We're going to go to multi-time frames. We're going to go to the 1 hour. Now, if you look at this, each one is a different main currency piece. So there's JPY, GBP, CAD. We are looking at the Euro NZD. If you look at the Euro, it's the yellow, NZD is the purple. So Euro is big and NZD is small.
Okay.
What does that mean? So we're looking at the Euro NZD. This one's big, this one's small. This is something I learned from Davin Icao, D-A-V-E-N-I-C-A-O. He, I believe, is also harmonic scanner. No, maybe he's web analyzer. Actually, I think he is web analyzer. Yeah, there is Davin Icao.
Okay.
So I learned this from him, who learned it from the gentleman named DC Eastman. If you ever see that in the IML Elite page, go for it. Watch his trainings, 100%. Okay. That gentleman used to actually train bankers.
Wow.
And I don't know if I can tell you how much he used to be paid per hour, but let's just say it's almost half what I make a year.
Wow.
Yeah. So this strategy is from Mr. DC Eastman, care of Davin. So that heat wave map will help you in all of your trades. So what happens is when you see that one is bigger than the other, you think of it like a seesaw. Mm-hmm. So if you have, let's say, a seesaw where the euro is on the left side and the small one's on the right, your mm-hmm. heavier person is going to make it go up. So the trend is expected to go up.
Right. Okay.
So coming back here, that's interesting because right now it's going down. Now, mm-hmm. again, you know, the markets are closed, so maybe there's something else going on. So it seems like this may or may not be a good trade, which is where everything else comes in for that. Mm-hmm. So knowing that the strength of those currencies are indicative that it's going to go back up, then you want to keep a lookout for other signals.
Okay.
So once I've made that copy of that image, I'm pretty sure I did that. Let me just double check. Okay. So the reason why I make that copy is because when the charts are live, these can be repainted and you might not get a chance to see it again.
Okay.
So I do this and I make sure I get these down here so that you know when it is, and make sure you're on the right UTC as well.
Okay.
So GBP. Now remember my GBPNZD?
Yep.
Let's see where we are at with them on the heat wave. GBP, same deal. GBP is huge, NZD is tiny. So it's probably going to keep going up once the markets go back up. All right. So we're changing this to Euro NZD. And I always use the forex.com one. I really don't know what the difference is between the four, except they're different brokers. So we need to look at the 1 hour chart, because that's where the paint came from. Turning off the bands because it allows you to see it, the line, but not the bands. It only goes to an hour.
Okay.
So coming back over here, the X was on 9/11/1700. So I'm going to be getting the XABCD one, looking for 9/11. Oh, UTC +3. Got to make sure it's right, because again, they will not seem correct otherwise. 19, is it that one? 19/9/11, so no, it needs to be more. Okay. So get your XABCD pattern, 9/11/1700. And because it's a shark, it starts at the top of the wick. So it'll be up here, 9/11/1700. The A is on the bottom of the wick for 9/20/0100. So it's going to be there. The B is at 9/26/0100 at the top.
That's neat.
The C is at 9/28/1500. So it's going to be at the bottom wick. And the D is at the top wick of 10/5/2100. Okay.
Nice.
So I lock it at that point because of a couple of reasons. It usually kind of moves things off sometimes. But also, if you ever do what I did one time and did right click, remove all drawing tools, it goes away.
Oh
And
gosh.
you have to redo it. So I know that it's already touching that one. I know that it's touching that one, and that one. The only one I wasn't sure about is the D. So let's go ahead and make sure it's correct.
Okay.
Okay, it is. Awesome. So now we have moved the harmonic scanner from our harmonic scanner to our TradingView chart. And now we can actually do the rest of our analysis. So let's see. It is now about an hour. I would basically, for this one, do the exact same things that I did before. You know, I would check the Heikin Ashi. So we see that it starts here. Even though this goes in a downtrend here, it's still higher lows. So that would be likely wave 1, possibly up here to here, but likely wave 1, wave 2. Actually, this might be wave 2 because that's a deeper one. You just kind of have to play with it. You know, look at the different retracements, the different levels, understand what it's expected to look like. I mean, this looks almost exactly like the one I just did, like almost Exactly. It's a little crazy.
Yeah.
And in fact, this scalping Marcos Cadena, I learned this one, I think, from Manny. No, I learned that one from Davin. This particular one, I can't remember why this one is better than your MACD, but this is saying that it's currently in a buy and it hasn't gone into a sell yet. So it's very interesting that that's there, because if we look over here, your RSI shows that it's a downtrend.
Right.
If we went to our, what's the other one called? Oh, Web Analyzer.
Can you see me?
No, the windows went away. Oh gosh, I hate that. I mean, I love the sound, but I hate that it's so loud.
Right. Yeah.
I can't see you, but Zoom is likely recording you. So,
Gotcha.
so I'll come back here on IML Web Analyzer, because what's interesting about this is that it provides you the ability to use indicators even if your TradingView doesn't.
Mm-hmm.
So it's a way to kind of edge the system until you can actually get a paid TradingView.
Right.
So this one, this is the, not GBP, it's the Euro NZD. Again, we're using the same one that we've been using across the board. What's interesting about this is the RSI is different. Look at that.
Right.
If we open this, no, not that one. It was this one. So the RSI shows that it's overbought,
Right.
but over here it shows that it's in the middle.
Hmm.
Actually, 14 close. That's a 4. Yeah. So very strange.
Yeah.
The stochastics show that it's a buy, even though it's show it's a buy with it being overbought. MACD shows that it's a sell, but coming back over to here, MACD is actually showing it's a buy. So I don't know if it's based on broker. I don't know, because I mean, this is TradingView. I mean, this is pulling from TradingView, so I really don't know why there's some programmatical differences. But bottom line is that if you do your own analysis, even if this isn't 100% right across the board, you are far more along than just taking the trades, which again, lots of people have been successful taking the potential signals from our tools and our educators. But putting everything that you learn together is much more valuable than just that. So I know I shared a whole lot. Do you have any questions for me at this time?
No, not right now. I do need to go back and watch some of those videos that I wrote those down, so I'll go back and watch those.
Perfect. So the way that you do that, are you aware of how to access all that stuff?
Yes.
You know that it's not in recordings, right?
Right. It's live, right?
It is in the live section. It's in the playlist that's on there.
Okay.
So you'll click that playlist, and when it decides to open, these are all the videos that he's done.
Gotcha.
Now, in our group, I recently added a new item to the units. I'll try and do another one for Mandy's as well, because the information I got was shared to me on one of Lee Allen's strategy sessions. But in the for customers section, Lee Allen channels charting course. When you click on this, not only does it give you her group, but it also tells you which videos, like what days are those particular charting course. So it gives you her link to her channel, her group, and then week 1, which day, how long it is, and what it covers. And each week she has multiples. So like I said, it's a 6-week course. It looks like it's about 1 to 3 each week. Like this week she only did 1, but most of them are about 3. And she has homework. So as you're learning, you can implement that homework and get feedback on it, which is one of the, again, for me, this is one of the reasons why I wanted to get involved with our company, because you have that direct feedback from these people.
Right. That's cool.
Yeah, so I'll try and do one again for Manny because I'll have to go based off of my notes because I have them by dates in here, but I may have missed some. But there's also some that are like covering the new products, and I'm like, this isn't. I don't care.
Yeah.
I can figure that out myself. But yeah. So there you go.
That's awesome. Thank you.
My pleasure. So
It's a lot of stuff.
it is. That's kind of was like, please don't pay for someone else. Like you have so much like
Yeah.
already in there. And again, I know that it seems like a lot and it can be daunting, but you just take one at a time. If you only have, let's say, a couple hours a week, watch one video at a time, right? Because each one is packed with a crap ton of information.
Right.
And not only that, but Steve Greger also mentions that 90% of the time that you're trading should be charting your trades, not making them, but charting them. And that's what I did a couple of days ago. I spent a good 30 minutes, maybe an hour charting that trade and doing it live. Of course, it broke like halfway through and I didn't know it. But I spent almost 30 minutes to an hour just charting the trade and checking what I was doing and not trying to race the candles.
Right.
And I've done that before, and I've almost immediately it goes in the opposite direction. You know? So
you can see that. I think that's been my thing too. Is I try to rush it.
Yeah. Okay. Well, I actually don't see you on the video now that I stopped sharing my screen.
Yeah,
Oh, there you
I
are.
turned it off.
Okay. So I hope that helped. I know it was a lot, but at least it gives you some direction on where to look. And unfortunately, they don't really do a good job of saying why you should check these people out. You know, you've got raving fans for Lee and raving fans for Dr. What's her name and raving fans for these people, but no one ever says why.
Right.
And it's frustrating because it's like, well, who should I listen to? Who should I be following? Well, everybody. Well, I don't have time to follow everybody.
Right. Yeah.
So
I guess that's what has been frustrating for me. But what I have learned, you know, Kevin has told me, you know, pick one person to follow that's I guess got the same trading plan as you. So that's why I've been trying to get to.
I can see that, but only if you're only wanting to take their trade suggestions, because
Right.
everything that every educator teaches you can apply to any time frame.
Yeah.
So I'm not disagreeing with him that you should pick one and follow them, but in the same token, I think that you should follow a course that they do,
Right. Yeah.
complete that course, and that way you're learning the information and implementing it, and then move to somebody else, because you
Right.
can always come back to them live later if they're when you're awake and when you can do those trades. That's fine.
Yeah.
But the knowledge is what's most important, not necessarily following that particular trader because they match with your time of day.
Right. Okay.
So again, I'm not saying he's wrong.
No,
I'm just
I know.
taking a different viewpoint on it.
Right. Okay.
For what's worked for me so far. So
yeah. Well, that makes sense.
So all right, girl. Well, I'm gonna let you go. I know you got kiddos to take care of, and
yeah, they want to go to the fair down the road.
Oh, how fun! Well, then I won't keep you. I'll put this up on YouTube in its entirety, and I'll split off the pieces that were, not relative, and then put them on my profile. So, thank you so much. I appreciate your time.
Thank you.
And
Have
feel
a good
free to
night.
you too.
Thank you.
My
Bye.
pleasure. Bye bye.